What's up, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is November 22nd, 2021. Some craziness going on in the market today. First off, I do want to just apologize because on my video on Friday, I sort of messed up the audio. Music was way too loud, so you couldn't really hear that video. My apologies. I do all of the editing myself. So usually, I go through my trading day, doing all this stuff with the Pristine Capital community, getting all that done. Then I bang out this video. Then I do the editing myself. So I was like super tired on Friday. Messed that up. But my bad. Sincere apologies. But let's dive into this day's analysis. Today was a pretty crazy day in the markets. A lot of wild reversals. We're going to go through all of it in depth. Before we do that, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's dive in, team. Whoa, not a new slide, but all right, from the current slide, boom. All right, box scores. S&P 500 finished the day down 0.28%, and the volatility ripped up 7.04%. NASDAQ QQQ is our big loser for the day, finished down 1.16%. With a big spike in volatility, we had small caps down 0.43%, and then we have the Dow Jones finishing the day slightly positive, up 0.08%. In typical, the first shall be last and the last shall be first fashion. Every dog has its day. The dogs of the Dow had their day today. What's interesting, though, is that the breadth was positive. So it really depends how you look at it. Last week, it was like, all right, yeah, the markets are up, but none of the stocks are going up. The breadth was just horrible. Now we had the flip side where the breadth was so much better, but we had the indices heading down. Let's dive under the hood so you can see what I mean. So Finviz heat map. All of these big squares, these are the biggest companies in the world. They have a bigger market cap. So these big squares, depending on if they're red or green, that has a much bigger impact on the index. We can see Amazon was down 2.83%. We had Google down 1.76%. Nvidia had a big time reversal. At one point in the day, it was up, I believe it was up like 3 or 4%, and it reversed to down 3. Even Microsoft was down. Apple managed to close slightly positive. I actually had an Apple to trade on, and I was able to close it out, right near the highs in Apple, which is good. The financials ended up performing much better today. The financials have been very weak, finally showing some signs of life. Then you can see energy performed well also. So it wasn't all bad, but it's just a lot of these areas that have been just, you can't miss if you invest in semiconductors. You can't miss if you invest in some of these growth stocks. Those were the areas of the market that really got hit. Sectors, we had the semiconductors, down 1.45%. We had solar stocks down 2.13%. Really just a lot of red across the board here. Look at this. The Spider Innovative Tech Fund was down over 4%, close to 5%. The Ark Innovation Fund was down over 4%. So yeah, some major carnage. And the sectors that were the strongest, we had retail up 1.43%. We had regional banks up 1.08%. Definitely have to keep a watch on the financials and the regional banks because treasuries are starting to make a big time move here. Let's check it out, team. So this is our ES, and the futures are about to open up in 6 minutes. So you can see this pretty bearish outside reversal, but in the grand scheme, did the ES really move anywhere? No, not really. Then we had the NASDAQ. NASDAQ was the big outside reversal, but at the end of the day, did the NASDAQ even really move much? In terms of this technical pattern, also not really, but we did have some very high volume on this, so definitely noteworthy for sure. And under the hood, a lot of the individual names got absolutely licked. Russell 2000 still looks very weak. It's below these key moving averages, and it's closing in on this top of the monthly value area. So a good good filter is, hey, if this stock's below the 20 and 50 day, I'm not really that interested, or this index. So that would immediately just filter this out of your view. And then we have the Dow Jones, which finished positive, but does the Dow Jones look good? No, not really, not at all. Let's take a look at our 10-year treasuries, because I think this is the big story here. Look at this. So we had our low from October. And we challenged that today on high volume. So the big question is, are we going to cascade? If we start cascading lower, these growth stocks are going to continue to get licked. This will have just been the little appetizer, and there's more to come. So it's going to be crucial to see what happens over the next couple of weeks with these treasuries. And if you zoom out to the weekly chart, you can get a much better feel for what's actually happening. So keep in mind, these treasury futures, as the futures go down, the yields are moving higher. And you can see we've pretty much been range bound for the good part of 2021. Like, remember in February when growth stocks really got hit? It was because look at what these treasury futures did. They really plummeted. But ever since then, they kind of stabilized. Then they moved even lower. They made a low in the beginning of October. And I found it so odd that all we really got was a little bounce in these treasury futures, but all the growth stocks just ripped to the high heavens. Now we're actually challenging this. So this is really the big story. This is what you want to keep focused on throughout the rest of the week. But let's actually look at some of these sectors so you can see what I'm talking about. So the Ark Innovation Fund, this is the weekly chart. This is our yearly value area. The Ark Fund is on the verge of breaking down into this yearly value area. Let's look at the daily chart. Daily chart broke below the monthly value area low, and now we have this virgin point of control down here at 104.69. But yeah, ugly candle. Take a look at let's take a look at the Semiconductors Etf. Overall bearish outside reversal, but not the end of the world. And then we have some of these stocks like let's take a look. Unity, name I'm definitely watching, down 6.61%. But the interesting thing is a lot of these growth stocks have been so elevated that even though like Unity had a just over a 1 ATR move to the downside, that's the average true range, but it's still trading above that 20-day moving average. Roblox, which I own, I actually took it out of my trading account, down over 10%, and look how far it still is away from that 20-day simple moving average. Huge reversal bar. What else was there? Net, down 11.65%. And of course, DigitalOcean, which I owned and I ended up selling today. This stock was down 20% in a single day. Now, remember when I first bought DigitalOcean, it was at $47.99. And I was like, man, this stock has so much potential. I really think it could double and get to 100. And that was like my big thing. Hey, if all goes well and we shoot for the moon, we could hit 100. We ended up hitting 100 and we just overshot up to 133. So this, it seems like a big thing, like, oh, 20% down. But when you look at what the stock has done, it's not like it makes sense, but yeah, it's really not. It's like a drop in the bucket in the grand scheme. So like, for instance, with that trade, let's take a look here. So just for some of my trades for the day, I closed at the remaining 2/3 of my DigitalOcean. I had paid $80.03 for this because I bought it at $47.99, pieced out of it at higher levels, and then I bought it back for $80.03. Closed it out for $115.76. So I closed it out when DigitalOcean was down 10% on the day. And I was like, I see this big candle. These typically don't lead to like a nice, just immediate bounce. Usually the stock really has to reset or really wash out. And I'm so glad that I closed out down 10%. Because it ended up moving down another 10% intraday. Roblox also closed out intraday. Roblox, I had paid $96.85, closed out for $120.46. So as a trend follower, a lot of times you are exiting on days like this, where it's like, oh my gosh, the stock just got licked. But as a trend follower, you want to follow that trend until the trend breaks. And this, to be honest, like, you could say this isn't even a trend break. Like, we're not even below any of the real key moving averages. This just put us back to the 5-day EMA for Roblox. But I just wanted to be proactive, just manage the risk, boom, knock it out. Hey, maybe Roblox ends up grinding down a little bit further. Maybe I can reload on that position in my trading account. I still have, the tactical portfolio a position in Roblox. So yeah, we have a lot of carnage. Let's take a look at these style factors, and we can see hardest hit was the growth style factor, down 1.25%. And then our best performer was high div, low vol, up 0.92%. And then we can see quality also got hit. So it was really interesting. Like over the past week, it was like, man, only FANG stocks are going up. You know, small caps are going down. All this stuff's going down. You know, what's happening? And it really was like the money rotated into FANG and then rotated out of FANG into cash or wherever it went. I don't know. Seasonality data. So now we have to ask ourselves, hey, was this washout day? You know, was this the bottom? Now are we just going to rip into the end of the year? One thing that I am watching for is, hey, into the end of November, this really should be our best seasonality. If we're just super weak here, that to me is no bueno. You know, we need to really start progressing to the upside. Or, you know, just finding our footing here, you know, whatever, because yeah, this is very weak action. We have the inflation concerns that everyone's super worried about. And if we look at the S&P 500, you know, we haven't even corrected to the 20-day. We haven't been down to the 20-day since October. So yeah, I think it's highly likely that, you know, we end up revisiting this level at some point soon. And let's take a look real quick at Bitcoin and cryptocurrency before we jump over to our options data. And crypto, so Bitcoin actually does not look that soft. So Bitcoin at one point today was down, you know, well over 2%. It was down almost to, yeah, in the 55K range. Now, yeah, it doesn't look so bad. We're basically going to put in a doji candle if we end up closing here. Not all that bad. The reason why I think this one, like, it almost looks like it's starting to stabilize a little bit, like Bitcoin and Ethereum, is because Bitcoin was the first to correct. So let's take a look. So that is Bitcoin. And then, of course, you know, we had corrections in the crypto miners, which I am currently long. So Bitfarms, big time correction down to this 20-day simple moving average. I think this one met its destination. And then you can see Hut 8 Mining is trading inside of this monthly value area. All right, let's take a look at some of the other moves that I made today. So I got long Micron common shares for 84.39, small position because the market is so wishy-washy. Closed out a quarter of it for a nice winner, and then I closed out the remaining 75% for a very tiny loser, like a 20-cent loser. So overall, this one was a very small winner. So not really too crazy on that. Closed out FPAC. This was a SPAC that I was long for 1061. I had paid 1090 for this, so again, you know, not really that big of a deal. Basically a scratch, small loser on that one. And then Roblox closed out for over a 20% gain. Digital Ocean also closed this one out for over a 25% gain. I think this is like a 30+% gain. You know, with these common stocks, I try to just hold on to them as long as I can, you know, as long as the trend just stays positive. But today, this was really like a signal for me, like, okay, exit these two. You know, I think the trend has really run its course. And of course, we'll have to see. You know, I'm definitely open to getting back in those names. In the morning, I got long some Goldman Sachs calls for January 21st. Small size again. And this one, I was like, I'm not going to get greedy. Market is very wishy-washy. Let me just see if I can get a base hit. That's what I ended up doing. Close this out for 16.15. I had paid 14.60. So little base hit, no big deal. And then my Apple 155 strike January calls, I closed those out for 13.20. I had paid 8.60 for those. And this, you know, very fortunate. I got out pretty much right on the highs of the day within the first hour. And then I did take some Qs puts into the close. So, you know, thank me later. I probably just put the bottom into the market team by me buying puts. So yeah, the markets have been super resilient. And I think what also makes this so deadly is that it has just been so difficult to be short anything over the past couple of weeks. Like, I've tried tactically shorting some things that are overbought, you know, buying some Qs puts when it looks overbought. Everything has just been taking stops. Now it just seems like the floodgates really opened. So yeah, we'll have to see what happens tomorrow. You know, I'm open for anything. You know, we only have 2 days left until Thanksgiving, so I think that's awesome. You know, I'm just in a good mood. We have the holidays coming up. My trend model flipped to a -1 though, so that's pretty not good, honestly. So tomorrow, if we stay at a -1, you know, we have VVIX ripping to the upside as well. That is not a good look. You know, I might end up getting even more defensive and closing out some more positions. I might take some stops on some things for losses tomorrow just to get out of harm's way. So we'll have to see. Let's real quick, we'll take a look at our big tech options order flow. Let's take a look at our options races. Oh my gosh, we got Tesla in the lead. Can anything catch Tesla? Absolutely not. We got 5.5 billion in flow for Tesla. Let's see anything else that looked more out of the ordinary. Let's see Amazon, Nvidia, Apple, SPY. These are pretty much like the usual suspects. Really like nothing unusual. PayPal is kind of unusual though. So let's take a look. We'll look at our tradescape. Tesla, of course, these call buyers just cannot get enough of this stock. And Tesla actually was a relative outperformer within this, you know, mega cap tech group. Yeah, Tesla up 1.74%. You know, Elon Musk sold his stock and now he's going to look like an idiot as the stock just rips to new highs. No, I have no idea. I mean, it could happen. It's just so crazy to me that, like, Elon Musk sold his stock. Like, buy. But, you know, it happens sometimes. Sometimes it be like that. Amazon, very mixed. We got some big puts going up in Amazon. Let's look at these. Amazon, yeah, getting sparked. And this, I feel so bad for everyone that trades Amazon. It's like you really got to buy the dips in Amazon. It's just such a tough stock to trade, you know, directionally. And then Google, yeah, Google pulling back right to that 20-day simple moving average. Let's take a look. Nvidia. Oh my gosh, and they all bought calls on it. These people are crazy. Buying calls into like super overextended stocks. Qs, wow, so a fair amount of puts actually going up. This is noteworthy. So we got the 425 puts for January, 405 puts for December, 395s for January. Some big calls too. It's the 362 calls for December, 405 calls for December. Yeah, usually it's pretty lopsided to the call sides. That's pretty interesting. Now let's see what we got for SPY. Wow, a lot of SPY puts going up. So yeah, we have the December 465 puts, January 460s, December 470s. Yeah, so the index level, seeing those puts going up. Let's see what else we got. Shopify, mixed bag. TQQQ, don't tell. Oh my gosh. So they bought, everyone bought calls on the triple leveraged NASDAQ ETF. So that just shows you where, you know, everyone is just so risk on. I think that's the big risk here. And look at this. And this will be the last thing we go through before we break for today. So there's not really that much in the way of put buying really throughout the entire session today. And there really hasn't been much in the way of put buying for the past couple of weeks. So if this really accelerates, and it just gets to the point, as it usually does, once people start going underwater on their positions, they're like, oh shoot, everyone's only been buying calls for the past couple of weeks. Like, oh my gosh, now we all need to buy puts at the same time. Like, that's usually how it goes. You can get some big time dislocations, let me tell you. And especially if you're in illiquid stocks that don't have much institutional sponsorship, you can see those stocks really move very quickly, if you know what I mean. So definitely just important to know what kind of market environment you're in and just understand, hey, you know, this is a much more challenging environment now into year end. But yeah, I just want to make sure I'm keeping an open mind. And yeah, I think it's going to be an exciting end to the week. Exciting little sequence here into Thanksgiving. So with that being said, hope you all had a good session, and I will see you all tomorrow.